Hi guys, welcome to the channel. So we are continuing with the last video that how we extracted the data from NSE website with respect to Nifty closing values and Nifty turnover and share traded values. So this Excel sheet we had downloaded in last video, and you can see how we did our analysis for calculating some simple statistical values which are important in terms of understanding where the Nifty is trading. So this statistics gives you that context to start with. It's not a full scale, full blown analysis to predict Nifty movements. And you should never predict Nifty movements. You should just understand how the Nifty is behaving, and based on parameters which we will discuss further in this video on how to understand Nifty movement, we can then develop a view on Nifty, and then we can take our trades. We can plan our trades based on these parameters. So initially you need to know the context of Nifty. So we have taken 1 year data and understood the levels at which Nifty can come and uh, can get support. So we had the date and close values, and we had derived the the mean and other statistical measures. Standard deviation was around 1180, and mean was 10,922, right? So minimum maximum is also been given, shown, and range is around 4750. So after knowing all these values, what we should be doing next? I got this question from one of my viewers, and he said, "So good explanation, but don't know how to go forward." So the way to go forward is basically understanding the distribution of Nifty. So once you get this chart, and you can see that in last 1 year, Nifty has mostly been in 11,500 to 12,500 range, right? And we can see from the count also that around 41, 49, 53 days it stayed in these levels. And recently we have seen the lower side of the Nifty, where it went till 7,610, right? So this distribution of Nifty says, from the past history we can say that it normally behaves in a normal distribution. So if you're not aware of this terminology, normal distribution, you should Google it and find it out. Basically a distribution of any kind of data is very important to understand the behavior of that underlying thing. So normal distribution normally has few outliers on each sides. It forms a bell-shaped curve, like it, it starts from a low point, it goes up, then it plateaus, it comes down, and then outliers on the right hand side, right? So this is not a bell-shaped curve. This is a very kind of a distribution showing that it is skewed on the right hand side, where most of the time Nifty has been. And it is because primarily we have taken last 1 year data. We have not taken from January onwards. Basically 1 year data, what I mean is from Jan to December. So that's the reason it is showing like this. Uh, so once you know the distribution of Nifty, you can see where Nifty is mostly hanging around. And if we just take from January to July, we can see that Nifty is currently not decided on which level it has to hang around. And 12,500 stayed for around 30 days. January, February, it was more or less around 12,000, levels. Then it slided down, and it went it went to all levels till 7,600 to, it has seen all the levels right now. It is trading in 4,000 points range. So what can happen in next 5 to 6 months? We know the macroeconomic factors. Basically, Nifty has recovered from the crash. It not fully recovered, corrected from the crash, and it will behave in certain fashion. The thing is that if you can, if you have taken past 10 years, or if you have seen last 20 years of data, mostly Nifty takes a trend. It takes a trend, and then it hangs around. It gets into a zone where mostly it hangs around, and that's when sellers make more money. So Nifty is not showing any trend. It is just hanging around in that. It is neutral. It's kind of trading in a neutral zone. So my understanding of Nifty from last 10 years, what I've seen, it will hang around in these level 9,500 to 10,500 before making a move either up or down, right? So these are my my thinking right now, that the distribution and accumulation zone will happen here, 9,500 to 10,500. And why these? Because since it has already touched all these levels, it will form a bell-shaped curve with you know s- small small amount of days it will hang around here, and then most of the time it will hang around 9,500 to 10,500 levels, and then probably it will also make some movements here. Right now it is trading at 10,780, so it might give 2 more 3 more days here before making a shift back to these levels. And then my understanding is that Nifty will touch further down levels because of the macroeconomic factors only after a certain period of time after hanging in these three levels. So that's my understanding of Nifty from last 10 years that I've seen in the market. Having said that, it's not making much context right now. It's like right now Nifty is trading around its average 10,780. Nifty is trading around, mean is around 10,922. So a reversal can happen from 11,000 levels. I'll say reversal can happen right now also. Seeing the charts, it's not showing any up movements. It has shown up movement, but it is showing exhaustion in buying. So another thing we can analyze from this Excel sheet is the turnover, and we can copy this turnover. I've already copied this full column here and copied it to this C column, right? And then what I did was I tried to see the correlation between the close value and the turnover value. So what I found out was that there is a negative kind of correlation happening between turnover and close. So what it says is basically when turnover increases, the Nifty will go down, right? Whenever turnover increases, Nifty will go down. That is the significance of this correlation. That value which you have found. So having said that, you need to plot the Nifty close values with turnovers and try to see that if you can find out certain aspect of Nifty that can help you in making a good trade. So it's again very zigzaggy. Turnover is kind of fluctuating, and it is increasing. And since Nifty has already shown a big 40% move to the downside, it is giving a negative correlation. So that's what it indicates. But if you want to smoothen out this turnover. So turnover is very very zigzaggy, and I don't want to see all outliers or all kind of movements which probably were irregular. So I want to take out this value. I want to take out this. I want to take out all the extreme values, and I want to see a smooth curve, and then try to analyze Nifty. So what I can do is I can make a moving average of turnover. Okay, so how you make a moving average is nothing but you text you take a point, and then you use the average function, and then you whatever values you are taking, it should be equal to all the values which this point should be the middle point, right? So if this is row 11, there should be 10 values on top, and then there should be 10 values down below, so it should be around till 20, right? And then you drag it all the way till down below last row, right? So the significance of moving average is nothing but to smoothen out all these values inside. And if you see this C12, it is middle point of all the values on top of it and all the values below it. So if you see C2 to C22 I have taken, and that is a moving average for row 12, right? So if you don't understand moving averages, Google it, find it out. Beautiful thing, try to understand moving averages. can help you a lot in trading, right? So we then do copy paste for all the rows, and then you will have to take out all these values here. See, if I copy paste till here, all these are not giving me the right points. So this one is showing down below, so I will not take this, I'll delete it. Similarly, you take till the point where it is relevant. This is again not correct. This is showing C113 to C133. 133 is not there, so this is also wrong. So I'll take it out, and everything down below will also be taken out because those are also not right. So you have to take out till the time it is relevant, till the data points it is relevant. So this is relevant. It is still 132 row, and that is the data points. So this is the last data point for moving average, and then you can plot a graph between turnover and between moving average of turnover and the close value. So then you can get a better understanding. So you see the zigzaggy has gone, and we can see there is a trend upwards. Turnover is increasing, and Nifty has, since turnover is increasing, Nifty has to go down below, right? So this was a starting point. Turnover increased, Nifty went down, then it went up, corrected. So this turnover increase is to support the up movement, but it is not a correct correlation, right? The correlation was negative, if you understand from the beginning. So that means this Nifty up movement, while the turnover was increasing, is kind of a correction where buyers, to bring in more buyers, the market was you know brought to a certain level where again retailers come in, and then all the picture, right? So all the story comes: manipulation, operators, scam, this, that. So this is the point where I got interested that Nifty is at 10,780, uh, with respect to retracement around, it is at 78% retracement or 68% retracement. And here again Nifty turnover starts to decrease, and now there is a slight pause. And if there is increase, or if, let's say, turnover starts to decrease further, right, and Nifty doesn't move up, then I'm pretty sure that when the turnover increases, Nifty has to go down. This is as per the data points. This is not what I'm not becoming God. I'm just trying to make you clear of the data points, but what they are trying to interpret. So how this data points tell you all these stories? If you read more on statistic, data science, and other things, you will understand why data is important. Today, it's a data-driven goal, and I think every trader should understand all these terminology. So the whole crux is now that the turnover is helping us determine that the volume has decreased, and we have seen the uptrend, a movement of around 800 points in last 2 to 3 weeks. So Nifty was at around 10,300, and now it is at 10,800. So 500 points uh, increase we have seen. So if we go back to our charts, just a minute, I'm just trying to share my chart, and then it will be much clear about what to trade and how to trade. Some reason I can't share my charts. This is another problem happening. And that is probably because Zoom has been in the spotlight for all the wrong things. Can't share. So, any if you see the charts, you can easily see the exhaustion in buying, and right now I can't show it. So I'll just move on to my PPT, which I had prepared, and I'll try to explain from there only. So I hope guys you're liking the video. Please comment if you are having any kind of doubts, and you can always share the videos to people who are passionate about trading, who are trying to come and trying to understand, trying to make money in this difficult time. So I'm just trying to make all these things important, because many times people come with an expectation to become rich quick, but they end up in a lot of trouble. So I don't want that to happen for people who come with aspiration and then they fail back. So trading is a very good profession if you understand all the terminology, all the parameters. And right now, what I have seen is in the charts that 9,000 to 9,500 is our accumulation zone, where buyers came in, and I think it was momentum also that time that lifted Nifty to 10,500, 10,800 levels. And distribution, what we have seen in January, February, that 12,000 to 12,400 was the distribution zone. So this is the point where sellers sold everything and brought the market to 7,600 levels, and this is the level from which you are seeing right now. It's market is kind of looking bullish. So that is how market becomes after a certain time. It shows something and it becomes something else. So just be clear of these zones. Try to understand through charts. I can't show my charts right now, but at clearly marked. So maybe next time I can show if things work out. What is an accumulation zone and what is a distribution zone? And data points that I wanted to mention was that last month the trading average trading price was around 10,090, and if you see, there's a big divergence between what is the spot level and what is the average trading point price for Nifty. So again, that is not a good sign, showing a 800 points up move. I don't think so. It's common sense. People should apply their common sense, which is not common these days, but they should not buy at such high levels. That's my advice. But again, this video is solely made for educational purpose, so any decision needs to be taken with your financial consultant or advisor, and these videos are just meant for educational purpose. So Nifty futures is already there was a bearish shine. 8th July Wednesday we had a long unwinding by FIs around 4%. That's the data I recorded from again from the NSE website, and you can easily fetch these data in NSE daily reports. Nifty options unwinding on both call and put side, so we didn't see any fresh positions on the call side. I was expecting some call writing happening, but I didn't see any. So Nifty options is kind of neutral right now, and cash market we are seeing both DIs and FIs are net sellers. So this is again a very you know important point to be looked at. Both DIs and FIs are net sellers currently in the market, and you don't want uh, to come at such a point where already people have started selling. So these are the data points that I wanted you to look at before making an investment, and hopefully you can make a better assessment while doing this. So guys, if you like the video, please share it with your friends and family. Try to show as many points as possible, but it's become a long video, I understand. But this is probably the beginning point, so I think it's important for you to know everything. Maybe we can shorten it up after a certain time when we are aware of terminologies, where we are aware of what we are doing, right? So thank you guys. Thank you for watching. See you soon.